Hello everybody and welcome to our next educational video. Today we will be exploring the concept of the fixed range, how it can be a useful tool in your own trading analysis. Now stay with me until the end to get the basic understanding of what is it and how you can use it. This is gonna be a part one of a multiple series which we're gonna explain the topic, go in depth and also understand all the different strategies that apply to the fixed range. Now this is how the fixed range looks like. It's a main tool to measure the balance between buyers and sellers, to put it that way. When you select a specific price range, now also keep in mind that price is gonna be 80% of the time in a range, only 20% is gonna be impulsing. So most of the time price is gonna be in a range, so you just wanna be like buying the cliche, buy low and sell high, pretty much because that's how a range works, because it's just a market rotation between price X and price Y, to put it that way. Now, what is the definition of the fixed range? Fixed range is a measuring tool to find value high, value low, point of control, the high volume nodes. Now, the tool itself, it consists of different things. Now, the first thing is that it consists of rows, so-called. These rows are these ones. So as you can see, these are the settings that I'm using, but if I change this, let's say to 600, as you can see here, that thing changes. The most accurate settings you can use is the 148. That's what I have found through statistics. For the volume, what you want to be using is the 70. Some people use the 68. I believe it's almost the same pretty much most of the time, but I prefer to use 70. In terms of style, these are the things that you need: volume profile, value high, value low, and point of control. These are the components of the tool itself. And you're just gonna be able to find where the market participants find something cheap, e.g. value low, and something expensive, e.g. value high, and you're gonna be looking to be involved into the rotations between high and low, to put it that way. Now, selecting, how you can select the fixed range, when a range starts and when it ends pretty much. So let's say over here you can see I'm taking this from the impulse candle all the way to the end, and while this range is forming, let's say we're in here, you want to use this setting of the fixed range. You want to be using this extend right, so it can extend all the way to the most recent price action. Now as you can see here, we get quite a few rotations in between. Value low, moving a point of control, getting a pull back down, value high, moving back down, and EG just like rotating. Here it tries to break out of value, but it fails miserably. It just turns out this to be a failed auction. Comes back inside, does a few more rotations between the point of control and the value high, then just moves back down after this sign of weakness, the failed auction. Now, about the techniques which you can use, key analysis techniques for a fixed range. You can basically pull a fixed range into multiple techniques. You can be using, let's say, the low of the range. You can be using the start of the range, and there are multiple ways which you can measure it if there's not a big difference, to put it that way. And also you can use this on a small time frame, you can use this on a high time frame. So let's say if we move into the 4-hour time frame, let's just take a look at this. So let's say over here, okay, this whole thing is a range, and if we pull the fixed range from the start until the end, pretty much, yeah, okay, you can see over here the reason we got this bounce is because we actually backtested the previous range, value area high, to put it that way, and that's why we bounced pretty much, because we backtested this key support area. Now if we take a look, let's say from here all the way to now, you can see we're outside this value area, and even when we come back inside, you can see we got rejection, backtest, move up. So it's pretty clean, to put it that way. Now about the trading strategies which you can incorporate, there are multiple ones which you can use, but I believe the most simple thing, the most simple answer for a strategy for fixed range, get involved into moves from VAR to VAR, from VAR to VAR. Use the point of control as a take profit. Simple as that. That's it. It's that simple. Now, as a conclusion, always define your risks, set appropriate stop losses, manage your position sizes effectively, and remember, no strategy guarantees success, so always manage your risk accordingly to that. Now, we have covered the basics, like the super basics. We're gonna make a part 2 and part 3, eventually part 4 for the volume profile. This is just to get the basic understanding of it. So thank you for watching. I will see you in the next video. Bye.